Let's bring in Bryce Doty, Senior Portfolio Manager for SIT Investment Associates. Bryce, welcome. Good to see you. You know, one of the numbers that is astounding is that the average U.S. mutual fund went up, equity fund went up more than 8% in the first quarter, and yet more individual investors poured more money by far into bond funds, which struggled. What are they thinking?
Yeah, overall money is just flooding in from the sidelines. So I think it's just an overall sentiment improving as vaccines get rolled out. All this cash that was just sitting there as people were hunkering down is just flooding back into investments. And I understand what you're saying about the bonds, but some of the money is going into tips or shorter duration bond funds. You know, we have a fund, Vault, that is perfect for people that just want to hunker down. And I think the first thing you want to do before you go and take a risk on this rebound, this vaccine trade, is put some money in something safe. So after you put some money in Vault, then go for these sector funds. They're going to be big. I mean, you talked about travel. I think Away is a great ETF. And then as an alternative to transportation, but to also pick up on the inflation trend, is something tied to transportation costs, shipping costs. That's B-Dry. That's another great ETF. And you're going to see a lot of money just flow into all these different sector funds as the vaccinations accelerate.
And yet the flows into bond funds, and let's assume that a lot of it is going into tips, a lot of it is going into shorter duration funds. It's still something like almost 3-to-1 bond funds over stock funds, and bond funds aren't really lately the way to make money, period.
Now, it shows how starved people are for income, and yields are low, but they just want income wherever they can get it. Also, corporate funds, you know, they're getting a lot of popularity because they're going to do well as the economy goes up. Yet, you're right, the returns are not going to be great. As yields go up, the prices are going to wipe out your income.
Yeah,
so it's
you're going to get the income, but you're going to lose on the capital side of it, and so you end up sort of running in place, as far as I could tell. Talk to me a little bit more about that ETF that invests in the dry shipping sector of the world economy. Why specifically that one? Is it because everybody everywhere is trying to restock inventory, and when they do that, they have to send it on ships?
Right, and they're all doing it at the same time. This is historic. Never before we've seen the whole real world trying to restock inventory at the same time. So you're having major backlogs on our West Coast ports. There's a container shortage because you can't even get the ship back out of the port because it's sitting there in queue waiting to get unloaded. And they have shortages of staff and facilities to make that happen. So the shipping costs have tripled from China. So B-Dry is going to benefit from that. I know it's gone up some, but it's going to go up more because it's tracking these shipping costs. And as the rest of the world starts to get vaccinated, it's just going to be tougher and tougher. There's just going to be log jams and delays everywhere in the shipping world.
Shepard Smith here. Thanks for watching CNBC on YouTube.